Happy Friday morning, everybody, and welcome into the Traded Black podcast. I am your host, Shad Dales. Apologies for a little bit of the delay, but here we are. Earnings season continues, and we have got a big lineup here this morning as we begin with TerrAscend, followed by the Cannabis Company Holdings. Lots of questions amongst you investors that have reached out to us pertaining to the two companies. So we look forward to obviously bringing you great information as we have both senior leadership from both companies on here this morning. So let's get right to it. Welcome in TDR co-host Anthony Varell. Looking forward to this podcast here this morning.
How's it going? Yeah, I'm looking forward to diving into both of these conversations.
Yes. All right. Let's welcome in your neighbors in the great state of Florida. Ziad Ghanem, CEO of TerrAscend, along with Chairman Jason Wild, back to the podcast. Been a couple months, but here they are, and life looks fine for these gentlemen. How are you guys? Good to see you back on the podcast.
Good morning, and good to see you guys. Hello, everyone.
Hello, guys.
Good to see you. Let's jump into it. I know that for fiscal 2023, reported revenue of $317 million, which was an increase of 28%, gross profit margins of 50.3%, adjusted EBITDA of $68.8 million, which was another increase of just over 77% year over year. And finally, you delivered your first full year of both positive cash flow from continuing operations and free cash flow, which cannot be underestimated. So if you had to drum up, question for both of you, and I'll start with you, Ziad. If you had to drum up 2023 in one word, what would it be?
Fantastic.
Yeah. Fantastic?
Yes.
Jason, you agree with that?
Yeah, I mean, fantastic, I agree with, but I guess my word would be, foundational in terms of what we've done now. Now we can drop other states and other operations into the foundation or sort of the machine that we built.
That's actually a good word.
Yeah.
I know. Go ahead, Anthony.
Yeah, I was going to say, let's kind of just dig into the quarter. I mean, I know quarter over quarter, I think revenue was down 3%. Year over year was up 25% and change. Let's just tackle that off the bat. I mean, what attributed to that, and how do you see it growing or getting back to that growth, getting back on that growth curve in 2024?
Yeah, I'd love first to talk about how I described the year. There are so many things to be proud of for the year.
Yeah.
We're starting with completing the build out of the team, having a strong leadership team that has delivered in a way that is pretty unique. The compliance culture that we have built. We stand still today with zero material weaknesses, with zero restatement of any of our financials. So we're so proud of all the accomplishment.
We put out our K already.
And yes. So just being on time, being accurate, and creating that compliance culture is something I am personally so proud of. We've made substantial progress in 2023. You've talked about the improvement in margin to 50.3%, 130 basis points. You've talked about the 28% growth in revenue. You've talked about lowering, or we want to talk about lowering our SG&A, even with that growth in revenue. The adjusted EBITDA being up 77+ % for the year. The work we've done on our balance sheet, lowering the interest expenses, delivering the cash flow that you described. All this are things to be proud of. Now, when it comes to the fourth quarter, we had good momentum operationally in the first half of the year. Then we completed the Maryland acquisition and started Q's. The momentum gave us the confidence to initiate guidance for the rest of the year. So in August, we gave guidance of $305 million in revenue and $58 million in EBITDA. In October, we raised that guidance to $317 million in revenue and $63 million in EBITDA. And
which is where we should have stopped.
Yeah. Have we stopped there, we would have met revenue and we would have beaten adjusted EBITDA by almost $6 million. But instead, because we saw the momentum, we raised it again one more time to the 320 and 73. But what happened on the back half of that quarter, really the events that we described yesterday on the call with cultivation in Maryland, let's say one-time event, it's behind us event. And then the building, the cultivation center is new.
Yeah.
We're putting flower with great quality. It's meeting our standards. So that's what impacted the quarter. As far as how we bounce back, to your question on in 2024, I like what you said, Jason. Foundational year. It is a foundational year.
Yeah.
Then on that foundation, we will have growth levers internally, organically, but most importantly, we will call 2024 as the year of explosion for us, the year of growth for us, the year of explosion and growth, and that is inorganic expansion. And what I mean by this is, internally, we have Pennsylvania. So we know about Pennsylvania. We'll talk more about Pennsylvania, I'm sure. We have New Jersey wholesale. We have Maryland wholesale. We have Michigan also. We have
capacity expansion.
Yeah, so we have internal growth levers, but really we feel that now is the time, with those fundamentals being that strong, to bring in additional states, and Ohio will be one of them, and then some transformational deals as well.
Yeah, we're looking
at speaking of Ohio, because I caught that in the deck. So I mean, you guys timed Maryland very well. When the acquisition went through, perfect timing with adult use. Those numbers flowed through right away from a revenue perspective. What's the plan for Ohio? Because I mean, we talk about PA, we talk about Virginia, we talk about other main markets with adult use conversion. Ohio's probably going to be the first, or not probably, it probably will be the first one out of the gate to actually get adult use sales out of all these keystone markets that we're talking about. So, I mean, what is the plan with moving forward with Ohio as it relates to the state?
Right. I think it's the same as it was in Maryland. Differences in Maryland, I think when we said about 4 months before adult use started, we said, we've set an internal goal that we're going to get to 4 stores by the time it starts. I think it's the same thing here, but the difference is it's, most likely one acquisition, not having to pull off multiple acquisitions. And, we're looking at, we're sort of in different stages of looking at or even, offering up term sheets and things like that in multiple deals in Ohio. And we just, we feel comfortable enough with the amount of inbound deal flow that we're seeing there and the conversations that we're having there that will be in Ohio for the starter Rex, just like we were in Maryland.
Yeah, and then obviously you guys have the footprint in the neighboring state, Michigan. I mean, Michigan almost did $3 billion in sales in 2023. I mean, you have some of the more prominent brands in the state.
Yep.
Are you seeing deal flow coming out of that state as well, in terms of retail and being able to expand the footprint in an accretive nature?
Yeah, we are. Look, when we said it earlier in 2023, we had our margin in Q2 at 22% in Michigan. It was 29. It started at 22 at the beginning of the year, then it went to 29%, then to 36% in Q3, and we closed the year at 40% in Michigan from a gross margin perspective. And then we are maintaining that gross margin at that level in the new year. So now we have the confidence, like you said, with the brands, with the quality, with the innovation, with the new product launch, with the partnership, that we can run that operation, that mature market that is north of $3 billion in revenue with that kind of margins. So now we can build similar to the strategy and the vision to build on the machine, on the fundamentals that we run now. Michigan is running well. We can bring in additional stores in that state that has unlimited licenses.
I was just going to say that, like, unlimited state licenses within that state. Like, I know you've talked a lot about the Marylands and Ohio's, but Ziad, you really made a strong emphasis and point about the state of Michigan and the growth trajectory that presents. How much opportunity do you see that state presenting to you, as to Anthony's point here in 2024?
Yeah, look, it only depends on how quick some of the operators realize that we will only pay for the right price for the right business. We will never abandon our discipline of paying for the business that is buying for an acquisition that is accretive. I think it's a matter of time when that will take place. We have had multiple conversations. We've had double-digit conversation with operators, and some are still active versus others. But as soon as we have something to share on those new additions, we will share it externally.
And the other
And
thing
then,
is,
go ahead, Jason.
Go ahead, Jason.
yeah, thanks. I was just going to say, even as it relates to Ohio, though, we would be running it. I've had so many of these conversations over the last, even today, that I forgot which ones we said what in. But if we do Ohio, we'll also leverage our Michigan infrastructure that way, and have our corporate offices the same way we have in King of Prussia and Pennsylvania, where we run Maryland, Jersey, and Pennsylvania. And that's why dropping in Maryland, we were able to still have our SG&A go down year over year for last year, even with that increase in sales. That's the same thing that we'd like to do here. We buy in Ohio. Obviously, you have to have the people in your facilities being in Ohio, but a lot of the functions, the corporate functions, would be run out of Michigan, and that will help us get. It's the same thesis of in Michigan. That we realize we need to get to 40% gross margin in order to become EBITDA profitable. And the reason we want to drop more stores in is because then we'll be able to leverage that SG&A of the corporate SG&A there even better and have more of the 40% flow through to the bottom line. But we can do the same thing, adding 8 stores in Ohio and a grow in Ohio, and having that be leveraged with the same SG&A. So that's the same plan as what we want to do in Michigan. And even in a bordering state. And we can do the same thing in Illinois.
Yeah, it's like a Midwest region versus a Northeast region.
Yeah, I mean, that Midwest corridor is really starting to rebound pretty hard. And I mean, I think it's just going to get bigger with Ohio coming in. And then, I mean, New Jersey, I mean, we're familiar with New Jersey. We've walked your Boonton facility, met everybody there. I mean, how's wholesale going in New Jersey? You have Warner Brands, you have Cookies, you have some of the marquee brands in the cannabis industry that are currently being sold in New Jersey. How is that business segment performing?
Yeah, look, I want to thank the team in New Jersey and the wholesale team and the fantastic job that they have done. When I think of wholesale, for a wholesale business to be successful, you need 2 things to take place. The first one is the groundwork and the team and the selling and the presenting the brand and the training, and really set up your brand for success. And we do that very well. Wholesale is in our DNA. It's not we're learning wholesale now. We started wholesale in California. We've done wholesale in Pennsylvania. So that work is easy. We do it well, but anybody can do it. But that work can never accomplish success in wholesale unless it's complemented by the second piece. And that second piece is good brand, good quality, innovation, product launch, and then the judge of all this is the consumers, because you can put your product on any shelf through relationship, through incentive, through whatever you want to do it. But unless the velocity is there and the consumer continues to buy it, then you're not going to grow that business.
Yeah.
And we have the first part. We have the second part, as you've seen when you visited New Jersey. It's proven by the market share. It's proven by the awards we've won. All those things that we've done in New Jersey. Those 2 pieces together have resulted in our wholesale from doubling between Q2 to Q3 and increasing by 25% on that double. Where currently we are sitting, our wholesale in New Jersey is almost equal to our retail business in New Jersey.
Yeah. Okay.
Number 2 market share in New Jersey, correct?
Yeah, it's tied. Yeah.
I want to talk also about Pennsylvania. Like we've talked about here lately on the podcast about some short-term catalysts pertaining to the space. The ballot, obviously, in Florida for adult use, rescheduling. I won't go down that road. I'm not going to come up with some crazy rumors that are going on.
What's another word for imminent? I was trying to think of another word for imminent.
There's 4 of them. There's elevator conversations going around and just backhanded tweets all over the timeline today. So
I got people.
We've got more imminence coming soon.
Imminent is now a spaghetti sauce. Some of the comments that we're getting here recently. But look, you guys have indicated.
Out loud. Sorry, Shad. I just wanted to say I truly laughed out loud when I read your tweet this morning, Anthony, about the Yikes machine.
Yeah, they like to come out of the woodwork, and there needs to be a distortion article to basically counter every positive thing that happens. And I mean, now it's just program behavior.
Hey, it
that
makes
we're
our job
doing,
fun,
but, hey,
right?
we'll see.
That's why we're
Yeah.
in this space for some. Well, I don't want to say it's the only reason, but one of the reasons. But
No,
I
but
will
Jason,
say
we're going to talk about Florida in the future. Let's talk about Pennsylvania today. because-
Pennsylvania.
Yeah.
What's the latest on that? Because you guys have said once that is passed, that is going to be your number one market. But have you had any insight, direction from what you're hearing as to how the developments are going on within that state?
Yeah, I want to talk about the development state, but I want to give a shout out to the Pennsylvania team.
Yeah.
In Pennsylvania, for the second quarter, we are up quarter over quarter and year over year, both in retail and in wholesale.
Okay.
Wow. Okay.
Which is fantastic. And again, it's fueled by everything we described earlier on wholesale, but then also in retail. We average our stores, and I think we chatted about that in the past. Our stores in Pennsylvania are averaging close to 10 million, a little bit more than 9 million per store.
Okay.
So think
Up 7%, I think, same store sales last quarter, year over year.
So think of that group of stores, pre-adult use going into adult use, and the magnitude of this. So again, high five to the team on this. But let's talk from adult use launch. Here are the facts so far. The governor in his budget address, he talked about a bill to be placed in front of him by mid-year and launch or first sale in January 1st. But we know there are pretty defined two sides of the aisle in Pennsylvania. But since then, we have heard, and collectively as an industry, we came together and we're launching a campaign to educate the Pennsylvania population around cannabis and what's coming, et cetera, et cetera. That's an evolution of us as an industry coming together proactively and doing this. And I think that will go very well. But also what we heard from experts, our attorneys and lobbyists for the industry who represent us on both sides of the aisles, that the barrier that existed with leadership of the Senate is no longer the same barrier. And now it's not we have an issue with cannabis. Now it's, hey, we agree we don't have an issue with cannabis. Is when can we make it happen? Is it January? Yeah, it's not if, it's when. Is it January or is it within a month or 2 or 3? So collectively, we still think it's the first part of the year, hopefully that quarter, and hopefully it's January 1st. But as we know, imminent could be January or February. So
here we go.
That's that's a big buzzword.
So these opinions on timing are for entertainment purposes only.
Yes.
But that's what we think.
So we have foundational for 2023. What would be one word that you would hope sums up 2024 when we're having this conversation at the end of the year?
I said explosive, and I meant explosive and expansion. Yeah. So I want you to find a better English word than what I described.
Yeah, expansionary or something about growing the base. And dropping substantial assets into the foundation.
Transformational. So this one was
transformational.
That's it. That's it.
I feel like I'm watching an episode of. I feel like I'm watching.
That's good equity research. That's good equity research word. You want everything to be transformational to the business.
Of course.
Yeah, so 2024 will be transformational for TerrAscend.
Last thing before I let you guys go.
23 was also. It was foundation. It was like transformational and foundational.
Well, that works. Before I let you guys run, I will say that this month actually marks a year since you were named CEO, Ziad, of the company. So, one of the main things I think that you've said, Ziad, over the course of the last year, and you as well, Jason, is just becoming, trying to obviously strive towards making business more predictable. And I know that you've indicated that, and you've actually outlined some of the things with regards to the cultivation towards the end of last year. But all in all, if you look back at a year from now, we're looking at a lot more trends with companies when it comes to execution, where some of the CEOs and chairmen are taking a step back. They focus on what they know, bringing in someone like Ziad, obviously, that's executing. So, he's here right now, but as a company, as far as execution, 12 months in, what would you think is your feedback and what you've learned and grown in some places since he's been brought on?
Oh, me or you? I'm sorry. Who was the question for?
So that's a question for you, Jason, with regards to Ziad.
What I've learned? Well, first of all, Ziad, cover your ears for a second. Ziad's done an awesome job. He's also become a close friend. He's somebody that, I've learned a ton from in terms of, how to manage a complicated org chart of a complicated company, and he still keeps his head and always has a good attitude and treats everybody with respect, but holds people accountable. I've definitely, he's far exceeded my expectations in terms of what he was gonna bring to the company. And it's been, 2 years, a little over 2 years that he's, he came in as president and COO the prior January. So
yeah,
it's been great. All right,
that's good.
You're supposed to be covering your ears,
Thank
man.
you, Jason. You've told me that. I really appreciate it.
All right, gents. Well, listen, good numbers to say the least. And look, it's great to see obviously stories like this trending in the right direction. And I don't want to I know you guys aren't going to say, look, our business is not dependent on announcements from Washington, but you can understand that if there are announcements, the lucrative opportunity it presents for companies like yourselves in the space. But congrats. And most importantly, let's keep in touch.
Yeah, absolutely.
Sounds
Thanks,
good.
guys.
Have a
Thanks,
great day.
Brian.
Thanks
Talk
so
soon.
much.
Thanks.
Bye.
Job well done on their behalf. They almost look
Yeah.
like they should be on an episode of Curb Your Enthusiasm with Larry David. They're just the
They're
personality.
funny. They're fun guys to be around.
All right. So
It's,
next up,
good
I know
dynamic.
this has been a big topic of conversation. A lot of people reaching out to us, but let's welcome in senior leadership from the Cannabis Company Holdings CEO David Hart, along with President Jesse Channon for second half or the back end of our podcast here this morning. Good day, gents. How are
How's it going,
things?
guys?
What's up, guys?
What are you guys?
Good to see you. Busy week to say the least, but for the most part, how would you, I guess, put into words just your latest earnings? David, we'll start with you, CEO of the company.
Sure. So, I think Q4, what we highlighted was a second quarter of finalizing, coming off of the transaction with Cresco.
Yep.
So there's a lot of activity in the quarter that we had sort of previewed in Q3. So we substantially reduced inventory that was required, and I think it was an opportunity for us to re-engage with customers both on the wholesale and on the retail side. And so there was work to be done, which we did. We got through the majority of it. I think we highlighted there's a bit left, but we got through a lot of it in Q4, which is important. And it was a first quarter where we had announced the organizational design changes to the organization. So we were getting everybody in their roles across the supply chain and getting them comfortable with the sort of new go-gets are for them. So there's a lot of internal activity in terms of just execution of getting towards the end of the year and preparing for 2024.
Okay. So there's a couple of things. I think there's 3 or 4 things that we want to go over here this morning because we've had a lot of investors reach out to us. But the whole idea is just to create kind of a narrative for long-term sustainability for the company. I know there's been some pressure on share price this week, but let's focus on some of the topics that people have reached out to us. First, highlights, as you said. You produced over $500 million in revenue once again in 2023. So quite honestly, that's a really big number, which puts you actually top, I think, 6 or 7 amongst all MSOs. Revenue growth was flat for the year. Some of the numbers were down, but still you have industry-leading top-line revenue. So interesting take here. How should investors be interpreting these numbers when looking at both ends of the spectrum as to what I just outlined? Jesse, I'll ask that question to you if you want to go ahead and tackle that first.
Yeah, no, look, it's a big business, and the reality is we've said it both privately and now publicly. Our focus moving forward is building a better business, not just a bigger business. We have a very clear understanding of the things that need to be executed upon to make sure that we are putting the best version of this portfolio and this company forward as we exit 24 and move into 25. I think like many in this industry, including someone like, Jason, who was just on, right? We believe that this industry is inevitable. This is a situation where we're going to see a transformative change in an entire CPG focused industry. And the companies that can figure out ways to create, to your point, sustainability and focus with regards to their execution are going to be there when these catalyst moments happen externally. Everyone's talking about Schedule 3 right now. There's plenty of those moments on the horizon. Our portfolio is loaded with markets that are going to see transition from medical to adult use. I think what David and I are really trying to make sure that we are communicating is that we clearly understand the feedback of who we are and where we need to be. And we are committed to the focus this year to make sure that this business looks fundamentally different as we exit this year with regards to the things that are most important, not only to investors, but also to ourselves as shareholders, members of the management team, and ultimately just 2 representatives of thousands of employees who are showing up to work every day and passionately executing on what the vision for this company is. So
Yeah.
it's, you know, it's moments like this that we appreciate, where we get to provide some context to that and hopefully connect with some of these audience members who are providing this, you know, candidly very realistic feedback on where we are as an organization right now. All we can do is help them to understand the clarity that we have of where we need to be moving forward.
Anthony, I know you want to get into some questions, but I want to give David a chance to, obviously being the leader and CEO of this company, if you want to elaborate on some of the stuff that Jesse just mentioned.
Yeah, even on the earnings call, I think we've directed people to recognize that we have work to do. We've got a big business to use, to mold to what we think we're capable of doing, and that doesn't happen overnight. You know, so I think we've directed people to say 2024. It's not lost, I think, on people that, you know, stage one of our business was planting flags. We were very good at commercializing a business throughout the country. Stage two was we were in potential partnership with a larger strategic with Cresco. Phase three is actually leveraging the assets on a go-forward business as a standalone business. We recognize, and we've heard, to Jesse's point, very loud and clear, the frustrations that people have with what we've achieved thus far. But we have a very big business. And so taking that and turning it into something that I think looks very different than what it is today, both financially and culturally, that's the goal for 2024. And it takes a couple quarters to do it, but I couldn't be more excited about the opportunity to actually prove to people what we're capable of doing and what these assets can deliver over time.
Duly noted.
Yeah, and I mean the assets are impressive. I mean, you have one of the largest footprints in the space. I mean, it's one of the best strategic ones I've seen if we're going to plot it out on a map. So I mean, I'm kind of excited to dive in here. And I want to know, Jesse, we've talked a lot about Virginia. You guys dominate Virginia. Virginia is on the precipice of having adult use happen. I mean, how important is Virginia to the portfolio and in terms of growth moving forward? And do you think that they're actually going to get adult use done? Because we've seen the bills came together, they're on his desk. The bills aren't together, they're not on his desk. It's kind of becoming like a little bit of a game of telephone, which I know regardless for you guys, you have, I think it's 10 operational retail with 2 in development right now in the state. So I'm sure it's attributing significant revenue already. But how important is that on a go-forward basis to the business?
Hey, look, Virginia is a crown jewel in the portfolio. There's no question. Everyone knows what Virginia is and what it's going to be. I think we're in a very unique position. When you ask me about how much attention am I paying to adult use, we're paying attention because of operational concerns. Obviously, we've shown, you know, we've been in now multiple markets that have ultimately transitioned to adult use. So we understand the strain that puts on the supply chain, the readiness that's required, making sure the team is fully supported and ramped up. I would say from an outcome point of view, I'm less concerned about adult use this cycle or another cycle. Look, It's inevitable, right? Like transitions to adult use in recreational cannabis, it is a safe and tested product that, you know, the HHS has clearly said has scientific and medicinal purpose. We believe that, right? Like I'm a fan of the products. I understand what they mean to people in improving lives moving forward. So for us, a regulated medical market in Virginia for the foreseeable future, not a bad thing. Right. I mean, we are 2 out of 4 operational licenses. I think if you look at it, there's a different scrutiny with regards to reporting patient count numbers in Virginia that there are in other states. So I think everything is a bit of an asterisk with regards to estimations. The most accurate estimates that I've seen, or what I believe are probably the most accurate, mid-year last year, they had it at probably a 0.6% registered against total population. That number's probably now like 1.2, 1.3. Yeah. That is significantly under-indexed to mature medical markets, right? With regards to thinking about, you know, if you look at like a Pennsylvania or any other mature markets, how they've grown. So there's plenty of growth available in Virginia as a market for us. And as we all know, regulated medical markets can be incredibly impactful from both a revenue as well as a profitability for an organization like ours. So look, we're excited either way. I think the market continues to grow under medical. I think it explodes under adult use. We're fully prepared for either outcome.
Okay. And my next question is toward David. I mean, one theme that I've seen in these in the slew of earnings calls we've seen over the last 2 weeks is not an emphasis, but a shift to the conversation around wholesale. You have a lot of very lucrative markets where wholesale can be a component of the business, as well as a spree of brand partnerships that you've brought on within the last quarter. Is there a core focus in wholesale moving forward? And I mean, what does that business look like today for the cannabis?
It's focused. There's no question about it. If you look in our annual that was filed, we're down in absolute dollars in wholesale on a 2-year trailing basis, right? So we didn't invest in a time where I think that the market went through another evolution of sophistication in the wholesale market. And we were not a participant there. So we did put things in place starting in August, post the transaction. Jesse started building the team. We started re-engaging with other counterparts. So we're rebuilding that business at a very, to dumb the numbers down. If you have a wholesale business that's, pick a number, $100 million business that's doing bulk flower and trim for the majority of it, you're talking about a low to no gross margin, which means low to no EBITDA contribution. If you flip the script and you start putting finished products on third-party shelves, you could go 35, north of 50% for a lot of that business. And there's very little SG&A associated with the overall wholesale business. So for us, we could have a significant percentage growth in our wholesale business for the next 2 years without necessarily making a dent in the overall TAMs of the wholesale markets that we're in. That's a clear go get for us. And that's execution day to day. And that could have a material impact on our profitability of the wholesale business and of the overall business as well.
Yeah, and I think, look, just to add to that, Chad, real quick, I mean, I think the point that David's making is incredibly important, and it shouldn't be lost on anyone, right? We have very clearly said we took our medicine early. We deployed the vast majority of the CapEx needed to have the capacity and scale in these meaningful markets to be able to expand cultivation and manufacturing, which is what you're seeing happening right now across the country in a number of these markets as we continue to penetrate into wholesale markets, as well as provide more scale and supply to retail. But moving that product into finished goods has not historically been. And look, we're very transparent and very sort of open with regards to the things that we've done well and the things that we haven't done well in the past. That was not a strength of our portfolio and our organization prior to coming into this year. Their wholesale was used as a clearinghouse to move bulk product, sort of like bumper crop. That is not the right strategy, right? We know that. And so we have no problem saying that's not good. Let's change and let's evolve and let's get better. First party brand development, which we continue to see growth in the brands. We're excited about where those are heading, but also third party partnership with incredible brands like Old Pal and Arrow and some of these brands and more to come. That's a way to not only increase utilization and throughput through the facilities, but also to gain that percentage of finished goods that's moving into market, which we know comes at a premium at margin. That's the change in complexion of the wholesale business that you're going to continue to see from us moving forward, which again is part of that core focus of building a better business, not just a bigger one. Right?
Do you think was that the main reason you think why? Look, I don't want to take things away. I think that we're looking at this wrong. Over $500 million in revenue is a big number. Some investors have reached out like, why was revenue flat? But do you think that was probably the main contributor as to why it was?
I think revenue being flat is a symptom of a number of things. Look, we operate a portfolio of states, right? That you see pricing compression in a number of areas that come across. We all know this is not a secret. Pricing compression is significantly more drastic, especially in more mature markets when you're selling something like bulk or feedstock into other operators or brands, as opposed to commercializing and focusing on building those brands and finished goods on shelf for yourself. And so I think that when you look at the wholesale business, part of the strategy to fighting compression in that market is around moving into finished goods, building brands, having great partnerships. On the retail side, just continuing to build better experiences and focus on supporting the team so that it's a great retail experience that people want to come back to. You're putting the best brands on shelf. And that in itself also lends the ability to fight that pricing compression that we see from market to market.
Yeah.
You mentioned CapEx previously, Jesse, but whoever I guess is the better answer for this question can take it. I mean, is there an expected CapEx spend for 2024? And if so, which markets do you foresee going deeper into that you're currently in?
Yeah, I think we alluded to, very low CapEx for the balance of 2024, similar to what we saw in Q4. The CapEx is really going to the few remaining dispensaries we're going to open in New Jersey, Virginia, and Maryland. And then we have some small incrementals in a number of markets that are transitioning to adult use from a manufacturing perspective. Those are very low, in the tens of thousands for us to prepare for adult use. So it's very, like Jesse mentioned, we deployed all the necessary capital over the last 3 years.
Yeah.
Okay.
Well, you guys have been on this job for quite some time now, but now as leaders of this company, I will say, like, if there's any companies, they all go through trials and tribulations, but you guys are obviously being tested with a number of things all at once. And we want to go on to the next one. Let's focus on your current balance sheet restructuring, and more specifically, your announcement from this morning where you completed a private placement of up to $19.5 million. So David, walk us through this announcement and the implications it will have on your balance sheet, which I know will probably answer one of the big concerns that investors had right now.
Sure. So use of proceeds are going primarily to the May maturities, 13.2 million. So we will satisfy those. I think that's a question that came up during earnings and after earnings. And so this was primarily going to be focused on addressing the May maturity. We also have a component of the 25s, about $5 million that are rolling out to this new security in 27. So in essence, we're going to continue to be opportunistic about lowering the debt profile of this business when it makes sense. But clearly, we wanted to address the May maturity. People have been asking questions about that. So it's a few new institutional partners, which is terrific. This is a challenging environment to raise capital, but we raised basically the minimal amount that we needed to address the near-term needs. And now we don't have a maturity issue until June of 2025. So we've got plenty of time to work on what Jesse and I are focused operationally to improve the profile of this company throughout the balance of the year.
Was this a continuation of the previously announced deal that had like the dynamic pricing? Like now that's done?
No, so this is a separate transaction. So
okay.
the 5 that's rolling from the 25s, we now have just under 60 million that's going to be left in the 2025s. There's still about 15 that could potentially convert to bring that 60 down another 15. That's the debt equity that was announced earlier, and we're below the floor price there for the conversion.
Yeah, because that's price protected, isn't it?
Yeah, it's price protected. Yeah. Yes.
Okay.
So next debt maturity is scheduled for May of 2025, correct?
June of 2025.
June of 2025. So you've got yourself a good 12, or I should say 15 months. Lots of time. Okay, let's focus on the next question that some of our viewers reached out to us involving your former CEO who's selling stock. Many investors have noticed through public records. Your former CEO, I won't say his name, but has been selling quite a bit of stock since leaving the company. So many things can be speculated here. And I know, Jesse, there's only so many things that you can control when it comes to people's speculations, but you two are now at the helm of this company. What clear message do you want to communicate to investors that, quote unquote, there's new sheriffs in town?
Look, I don't like to, and I know I can speak for David as well. I don't like to get too involved in speaking to anyone's situations with regards to selling shares or anything else. What I can tell you is that what's happening with selling shares for someone like Nick, he's been well published and obviously having commitments to charitable organizations that continue to be fulfilled. Whether or not he's continuing to sell for personal reasons, we have no insight into that. And that's not something that we're necessarily focused on as a company. I can tell you, I'm not selling. I believe in what we're doing moving forward. I believe in this company. I believe in this team. So you're not seeing inside selling coming from the current operators and management team of the organization. I think to the contrary, that that's not going to be the case moving forward. We believe that we are obviously incredibly undervalued. I think it's almost a joke at this point.
We were laughing about it before the show. Look, from a valuation perspective.
No, I mean, the valuation of the company right now, I think, is probably somewhere slightly below the cash value of one of the Virginia licenses, right? So I think everyone continues to potentially lose sight of the tools that are available in the toolkit to this organization moving forward to ensure the continuity, but also that we are fully viable and prepared to catch whatever waves of catalysts are available from external moving forward. And the other thing that I would say, and look, I think, our goal is, again, to try to engage and be incredibly transparent with our investors and stakeholders at this organization moving forward. We hear the feedback and the commentary loud and clear on a day like today. It continues to pop up again about us being completely insensitive or not focused on the dilution that is taking place. It couldn't be further from the truth. Actually, I think our board has historically shown that they are hypersensitive to dilution. What I would say is, I'm a shareholder, David's a shareholder, our employees are shareholders, and we recognize that we are disproportionately retail invested from individuals who are literally taking their money as an individual and putting it into these stocks, including ours, making a bet on this industry. I don't take it lightly. I don't think any member of our team or management takes it lightly. So we're doing what we believe is necessary to make sure that we have the best version of this company possible moving forward, to be able to share in all the winnings that are going to be available when this thing inevitably changes as an industry. But I want people to make sure that they hear it directly from us. There is absolutely no insensitivity to things like dilution or the impact that this share price, which I cannot make sense of right now, I'm going to be honest, is having on individuals who have put their money into this stock. We take it very seriously. And this is a show me story. I'm not going to ask for any trust right now. We're going to earn it throughout the rest of this year. I think we will do the things necessary to execute, to show people that a bet on this company was a good bet. And ultimately we will be there to take place in the winnings at the end of this.
Well said. Anthony, fire away, because I know you wanted to follow up with something related to that.
Yeah, I mean, we got the tough stuff out of the way, obviously. What excites you the most in 2024 for the cannabis? I mean, I can start going through all of your markets with a fine-tooth comb, and I mean, they're explosive looking markets. I mean, everything from New York to Ohio to PA to Virginia. What excites you the most for this year to really, I guess, roll both your sleeves up and own in terms of the business?
So I would say it's day 60 as the CEO. I looked it up before we jumped on the call. So it's day 60. And I think what's most exciting to me is the momentum that we've started to see build even over the last 2 months in terms of everybody rowing in the same direction and understanding where we're headed for the balance of 2024. We started with the size of the top line business. I don't think there's another business in the space that has as much opportunity to change itself over the course of 1 year with the assets we have. We have the organic growth opportunities that you just walked through. There's a bunch of emerging markets. We're already built. We're already purpose built. We're ready for that. Those we just have to, that's execution. We just have to be there. We have to participate. We now have relationships. We're in a better place structurally, organizationally. Flower quality continues to improve. Manufactured products continues. We're a different company from 2 years ago in terms of our product quality. So we're going to be there to play when the markets come. You can see the momentum we have in New Jersey, which is probably our fastest growing wholesale market in the country. It's terrific. But to me, the most exciting part is to get to the end of this year and to prove to everybody what we're capable of doing with the assets we have. I think everybody is very excited at the leadership team and at the operational leadership team to prove, to go back to the stock. I think all we need to do is actually perform and deliver and execute on what we know we can do internally. Fundamentals always trump everything else. There's the rescheduling that could be helpful. There's a bunch of other things. But if we actually do what we know we're capable of doing with the assets we have, the value will be reflected. That's the show me story. And so to me, we have plenty of time this year. We see the green shoots that are happening. We just have to continue to be focused on only what we can control. Everything else that's not in our control doesn't really matter.
So you think a lot of changes, you anticipate a lot of changes over the next year, but you'll ultimately reflect on your bottom line?
I think that's the absolute mandate. There's no question about it. I mean, we need to look fundamentally different. I think that's why we changed the way we talked to investors and to analysts on earnings, right? We didn't give much color about Q1. We didn't give much sort of outlook for 2024 because I don't want the team to make very near-term based decisions when we've got a year to prove ourselves. So I think you underestimate what you can actually do in terms of the misincentives. If you say we need to do something in Q1, we want to look very different by the end of the year. So let's be very thoughtful. Same thing with wholesale. I'd rather get to the middle of 2025 with a fundamentally different looking wholesale business that is strategically relevant and very financially impactful. And that requires you not to make certain near-term decisions. And so I just want the team to be hyper-focused on every day we should be doing something that's going to make us look very different by the end of the year, fundamentally, financially, and culturally.
You guys can correct me. Go ahead. I was going to say,
go ahead. Take it. It's fine.
Who's going? I'll go. You guys can correct me if I'm wrong, but I feel like there's nothing holding you back now. Is that the biggest difference now with you guys leading this company compared to what was on before, or am I reading that wrong?
I think there's a couple things. One, I think we had a couple technical issues we had to get through. There's a Trainer Ridge overhang that's now behind us. We knew we were going to do. We were going to address the May financing, and we wanted to get some clarity on organizational design below us in terms of getting people in the roles and having an understanding of why. It's not just the what we need to do in 2024, but it's the why. And I think that doesn't happen overnight, right? So I think we've started to get everybody to understand where we're going. So to me, that's the difference. And again, part of this is just distance from being in a tango and a partnership potentially with Cresco for so long. It's 16 months in cannabis is an incredibly long time. So getting everybody comfortable with it's ours, we're going in this direction. Let's be proud of what we're going to build here, and let's know why we're doing what we're doing. People want to hear why they're doing what they're doing and how they're contributing to the overall performance and health and well-being in the company.
Yeah, well, look, I was in the media industry and I saw acquisitions happen at times, and I know how that can suck the life out of one company. And if a merger actually doesn't happen, I don't know if that was the case, but at the end of the day, you can understand how that could be a major distraction for a company when a merger like that is being basically, sitting on your left shoulder all day, every day, each day you come in. But is there any truth to that, pertaining to a lot of time that was allocated towards that possible merger? A question for either one of you.
Yeah, I think, and I'll let Jesse speak to some of the culture. I think we had the inability, and it's to no fault. It's just the actual part of being in a transaction, giving clarity to people about the go forward strategy, the direction, their roles and responsibility. What does the overall organizational design look like? It was tough to give people clarity on those types of things, and for people's normal everyday life, that's very uncomfortable and frustrating. And so I think just getting through and having the clarity of, this is ours, we're going forward, and here's what the new design looks like, which made sense when we actually told everybody what we did before. The way we built the business had served its purpose in time, which was being vertically integrated, have singular P&L leaders. Now we've got more, we've got a broader base with specificity across the supply chain in a regional basis. It's allowing everybody to actually work in a more efficient, transparent way. And I think that was, to me, we were going through markets that were going through adult use conversion and or about to go through adult use conversion. And it was difficult for us to completely lean in and do everything we absolutely wanted to. But we are where we are, right? So I keep telling everybody, we have to look forward. We have great assets. We've spent the money. Everybody's aligned. Everybody's in position. Now we go. Now we understand where we're going and why we're going there. But I think culturally, Jesse might be the cultural leader of this organization. So I think he could probably speak to the things that he's done even over the last 60 days to get people fired up and focused on where we're going.
I mean, look, the only thing that I would add is, I think my hope, and hope is not a strategy, so don't hold this against me, but my hope is that people will be, when you look back on a year like 2024, the year that we're in right now, people will be really excited about the velocity of change and transformation that took place in this business over this year. And I will tell you, the reason why that is possible is because even though we had this incredibly difficult time with Cresco, look, David and I are still here, but if you go layers beneath us to the executives that you can make the argument really matter at the organization, the subject matter experts that run the areas of the business, plants, people, process, right? That level of the business, there was very little turnover. There is unbelievable continuity in the executive team and the direction of this organization at those levels. That is what is enabling us to move so quickly and really start to have an impact on the areas that we need to in this business, because those subject matter experts they're there. They've seen it. They're standing by. They were ready for change. So I think what has happened is, with the additional clarity and transparency that we're trying to provide, again, not only in conversations like this, to hopefully be able to provide some level of insight to stakeholders externally for the organization, but for the internal stakeholders to really have a better understanding and a better connection to the leadership of the company, of where are we heading, why are we doing the things that we're doing, what are we focused on, and what does good look like. When you have that talent, let them go. Just give them the initiative and the direction and go let them perform. That is what will define 24.
Very well said. Last thing I'll bring up too, you'd mentioned earlier, Jesse, look, you're confident. David, you're confident. You can't control what other, executives were doing, that neither one of you are selling. We've had a few people reach out to us and say, have they explored, or would they consider as a company any kind of like share buyback? Is that something that has crossed your plate? And is that something that you would consider, just to, again, instill investor confidence for the long-term sustainability, for the company? David, I'll begin with you.
Yeah, so I think we still have an authorization that's out there, so we would have the potential to do that. I think we'd want to weigh, the near-term use of cash as we're building out and preparing for 2024. So it could be a tool in the toolkit. Jesse said he's not a seller. I'm not a seller. I think we need to put our money where our mouth is, right? I think we need to define the go forward. We need to execute and show people, we have a Q1 report that's going to be here sooner rather than later, and I'd be I'm enthusiastic that we're going to be able to share some of the success that we're seeing in the green shoots in Q1 and continue to do that going forward. It is a tool in the toolkit. I think others have deployed it. I think some successfully, not successfully at that. So I think we just want to be very thoughtful about the use of capital going forward, and recognize we do have some things we want to do on a CapEx basis, and just be thoughtful about managing the cash balance.
Understood. Jesse, you want to add to that? Are you good?
No, I mean, look, I think David covered on it. At the end of the day, our focus, and I think, look, that's the key theme here, right? Is focus. I think we have a lot of clarity and understanding around the things that we need to do. Our focus right now is not on some of those things. It's on making sure that we are providing a business that's what's going to move the market. That's what's ultimately going to be reflected in the stock. This is, like David said earlier, it's a show me story. We need to prove to people that this is moving in the right direction. I feel very confident that in 2024, we will be able to show those themes, those green shoots. It'll be in print of the things that are happening with this organization and the reason why it is trending towards something that, you probably want to own now to see the upside, but you definitively want to own by the end of the year as we continue to see these external catalysts, as this becomes closer and closer to inevitability as an industry for normalization. We'll be there and we'll be ready to capitalize on it.
I think that's the reason why so many people are sold on your story, really, is that when you look at the assets in the key markets that you're in and the footprint that you can build out, I think that's the reason why people want this to win. But to your guys' both point, now is the work, time to put action, word into action, and we'll watch this closely. But listen, I appreciate you guys obviously answering a lot of these questions. I hope our viewers got some good dialogue out of this feedback. So best of luck. Let's keep in touch. I know it's going to be a big year, and I know you guys don't do this, but I will. But I want rescheduling to happen. How's that
I'm
sound?
looking forward to the Q1 conversation and going over these green shoots. So it's I'm really looking forward to that.
Hey, we appreciate you guys. Thanks for having us on. Thanks for giving us.
Definitely. Thanks for your time today, gentlemen.
Thank you.
Look forward to doing some on-location content next month when we see you in Florida. Good to see you guys. I thought that was good. I thought that was great. But, most importantly, like I said at the end, they got great assets in key markets. I think that's the reason why people really like this story. But at the same time, too, questions about, what's next. And I think they pretty much made it clear as to what needs to be done. And now it's just a plan of action, right?
Yep. I mean, they've basically been handed a Rolls Royce in that footprint and that company. And now it's time for Jesse and David to put their footprint and fingerprint on the business.
You are
definitely the guys to do that.
Definitely right with the way you explain that. It's a hell of a business that they've got in those markets. Yeah. All right. Everybody, thanks for checking in, obviously, this morning for the TDR Traded Black podcast. Leave some comments below. Don't forget to smash that like button. Hope you guys enjoyed this back-to-back earnings reports. We're actually going to have a podcast pushed out on Sunday evening. We're going to highlight some of the other companies that announced their earnings as well. The big rumor going on here today regarding some elevator pitch. Speaking to Cory Booker, is there any truth to that? As well, Dan the Chart Man will have a quick run through of all of the companies and how they perform within this space, within the cannabis psychedelics. Don't sleep on that in the crypto space. That's going to be posted on Sunday evening at 8 o'clock. As usual, don't forget to subscribe to our daily newsletter, the Baked In newsletter. We have our latest earnings reports this week. We have our cannabis index. It's launching next week. So a lot of information exclusively for the TDR Baked In newsletter. So please subscribe. The link is below in our comment section. And in the meantime, enjoy the rest of your day. And we'll check back with you here in the live stream Monday at 4 o'clock. And in the meantime, have a great weekend.
Have a good weekend, everybody.
Thank you, sir. Hey everyone, thanks for watching. And if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information. Share this video with your network, and don't forget to subscribe to our channel.